of these innovations. And let me use maybe mobile money as one of the digital financial services. When you look at the impact of these, the mobile money to the financial landscape in terms of financial inclusion, but also in terms of expediting finance. The mobile money, let me use the global currency dollar, $100 in a minute, maybe between tens of people, and that's value being created. Unlike in the past where it would take maybe a day to transfer $100 from one individual to another. So when you look at Rwanda, I just use some examples to show how this has really helped. Way back, we started using mobile money in 2010. 2009, that's when it started really, but 2010, that's when it was taking shape, and the amount transacted on the mobile money platforms at then was around just 8 billion Rwandan francs. You can look for the exchange rate and change that into dollar, but that was just 8 billion over the period of the whole year. And last year, 2016, it had moved to 1 trillion. So from just 8 billion, we are now, last year, we're talking of 1 trillion. And this, and then we still had this predominantly used for transfer of money from one point to another. We moved beyond that. We use mobile money to buy goods and services, to pay for electricity bills, to pay for taxes, which is really very important, to pay for water bills. In fact, now we are using it to buy goods and services in shops and important products that we've just licensed, which is already predominantly used in Kenya and Tanzania, is micro savings and micro loans. When we talk of financial inclusion, this is going to be really the game changer. Because when you look at the numbers we had from our Finiscope last year, the Finiscope is measure of financial inclusion. The formal financial services, formal inclusion had moved from 2012 to 68% in 2016. And mobile money had played a big role in bringing people into formal financial services. So the fact that today, now we are using mobile money to do savings and micro loans. In fact, when we licensed this, I think they started business beginning of this year. That is Commercial Bank of Kenya working with MTN Rwanda. But within less than a month, the demand was too much that the two investors had underestimated the expected demand, and the platform was really almost failed. So now they are running after their customers to try and increase the capacity of their platform to handle the demand. So the demand is there, and the change is, let me use an example of my colleague from the governor of CBK, the Central Bank of Kenya. He was giving us an experience of how these micro loans are changing lives. So like they monitor the transactions of these borrowing from on the platform, and 30% of that took place between 4 and 6 a.m. in the morning. And when they tracked this, they found that the ladies that were traders in the markets wake up very early in the morning at 5, borrow money using the mobile phones just within their still in bed, send the money to the supply of their goods, send money to the transport of their goods, somebody with a bike or a wheelbarrow, and then they go on doing their choruses at home, preparing kids for going to school, and by 6, they go to their market stores, the goods are already delivered, and they start trading. And normally by midday, they are done with trading and they can pay back the money. And we'd imagine that somebody running a bar in the evening will now, by the evening, borrow the same money, run their bar, and by midnight, they pay back the loan. And then, so the impact on the financial, on economic transactions is really big. So, and here, when you look at the electronic transactions, again, going back to our case, in 2011, we had only 0.3% of our GDP was transacted electronically. That is by 2011. Today, this has moved to 21.6%. And that was, as I said, when we still have predominantly just payment system. As the new products are coming in, I'm sure this is going to increase. So now, coming back to the regulators, why and how this has been able to support this, because we see and we know the importance, as just highlighted, of these digital financial services. So we normally allow new products to be developed, and we are called in as regulators later to see the kind of products that are coming on the market. But we have a general law that determines the operations and the rights and the requirements of running the payment system. And so this determines how the electronic money on your mobile phone. Of course, we always have a counterpart or a mirror of that in a bank account. So all the issuers of electronic money will have a bank account, trust account in a bank, and the electronic money should always equal to the trust account in the bank. And so that's our duty to monitor that. In fact, we've moved it now because the mobile money business have been mainly run by the telecom companies. So we've requested them to separate the telecom business and the mobile money business. And they need to have a trust that oversees the transactions of the mobile money.
Obviously, that separation you talk about is subject to a very big debate in your neighboring Kenya. But allow me just to jump in and bring in Louis,
yes,
who will either rubber stamp or rubbish what you've said, because he's operating in that space. Louis, you've been for I think 3 years now running payment solutions that are operating in this space. Are you happy with the kind of support you're getting from the governor?
Well, that's a tricky question because
he's here.
Tonight you're taking your plane and you're leaving me here alone. So, but honestly speaking, before I came to Rwanda, as you know, I used to live in Canada, so I had to visit East African country to see which one would suit the best the online payment facilitator platform I was bringing. Because I was targeting what I call the forgotten citizens, the diaspora. As you know, African diaspora are sending more than 60 billion a year back to Africa, and apparently it's growing despite any crisis we are facing in the world. So, and how do we really add value to that money? That was my question. So yeah, I came to Rwanda and I was surprised to see, as Honorable Governor said, they allow you to start. And then what they require was a regular conversation with them. I will get some call, they say, okay, we come to Central Bank and let's talk. What is exactly you doing? We've seen on the media, they say this and that, and then we talk. So it was really a very firm yet friendly conversation to make me understand that really I'm into serious business. So they won't let you do whatever you want to do, but they won't also prevent you to explore whatever approach you have. So on that level, in terms of regulation, it was much, I won't say easier, because when you get a call at 6 a.m. from the central bank, you are afraid of what's going on. But yeah, very open to let us do what we do. On that one, really, I can't complain. However, what I can say is sometimes you have to educate even people who regulate that. So that's the thing I can say, and that's why we need to have those conversations. Right. I remember when I came here, I would say fintech. Some people like fin what? So, but today now it's common word. They understand much better what merging is all about, and yeah. So.
Right. Let me just bring in Katka, because when we're having this conversation, everyone feels as though regulation is the biggest challenge in this space. You work in supporting fintech across the globe. What do you see as the biggest challenge for them right now?
So, there are definitely many challenges, but we always try to turn them into opportunities, I would say. So for the ones who don't know, the Kickstart is one of the largest multi-corporate accelerators based in Switzerland, but supporting really global startups to come. When we accelerate them, we basically work really closely with the corporations, but also a lot with the regulators. And I think a lot of that, I would say the challenge a lot is, that's what just Louis actually mentioned, is kind of the education and them acting fast, right? I think that's really the challenge in every single country with fintech. And so what we really try to do is to include them in those conversations and kind of also have exchange. So it's not only the one-way talk, but it's really conversation kind of between the regulators, the startups, as well as the corporations. And I think one of the things what made a huge difference for us was to work on different pilots. We call it POC, the proof of concepts. So when we work with the startups, we really try to identify, I would say, the opportunities where the corporations can work together with them and schedule pilots. Many times it will be even joint pilots. So last year we had one startup working payments and face recognition together with 3 corporations, UBS, Credit Suisse, and Swisscom. And so it's really great to kind of see that how the corporations work together also to identify their challenges, where they need to do. And that's so much easier for the regulators because it's kind of with a group of what needs to happen versus of hearing the voices from one by one.
Right. And most of the people who've spoken here have given a very positive account of the relationship, and it's all a happy marriage. Mohammed Al-Rashidi, you've been running One Global, and obviously we've talked about a beautiful relationship that could be between regulation, policymakers, and the innovators in the fintech space. You're not starting in this space with significant success. How has it been for you, and what are some of the real roadblocks on the way?
Okay. Actually, it's been since 2004 until today, and the start of mobile money began in 2007 with Sudan, and it was on Nokia phones using a virtual banking agency banking, where we have a network of agents that do cash in and cash out without mobile operators, without a bank. This is what we started in 2007 in Sudan, a product called Saraf Mobile. When we did that, we were isolating ourselves completely from the ecosystem. And this is a success, but at the same time, coexisting with the current infrastructure is where the challenge. So when we met with the governor of Central Bank of Sudan, and he said, what you guys are doing? Where is the money? We don't see money in the banks, and you guys are using GPRS on Nokia phones and doing all the transactions, and we don't have any control. If you are today running a liquidity inside your network with a 100 agent, what is your forecast for the end of the year? I said 4,000 agents. He said 4,000 agents. This will be what, 1,000 times what you are doing today, which we were doing in a week, $250,000 float inside the network. So he said, you will become the governor of Sudan, but the end of the year. I said, why? This is your job and my job. He said, I'm monitoring the liquidity. So the whole liquidity now is going under your network. And this is the challenge where the regulator, I respected that. That time I was an entrepreneur. I want just to make it. I want to care about regulation. I don't care about whatever rules being imposed. I want to do it. That's it. This is my aim. This is my function. I put a team. I structure it. I put a focus group to get me the customer experience, and let's do it. They want a KYC. I will do for you a KYC. No problem. You want whatever you want, I'm gonna do. But leave me alone. Let me do it. Then after that meeting, actually, I recognized how disruptive we were and how we will be impacting the economy. And the country were not ready. And the regulator, they have the right. They need to control. If they left it, we will control the country. And that's the challenge that is happening today between the regulatory body, not only in fintech. Actually, the disruption is happening in all the domains. We are having 4 main verticals: in health tech, in content tech, in travel tech, and in fintech. Every domain, it has its own regulation and it has its own precautions in order to protect the customer. This is the main area regulators are care about, protecting the customer, how to protect the customer. So we went back and we met with central banks before we do any job. Some central banks, they said, listen, we are not that well educated. We are working in 16 countries. And I can imagine every country it has its own culture, its own way of thinking. Said, go to the banks. Banks are more they will help you. We go to banks. Banks, they said, why I will let you do it? I'm gonna do it. You're gonna take my customer. So it's not only a regulator, it's also the banks that were challenging fintechs to support that time. Nowadays, you can see that lots of regulations being nailed down, not to the extent that you want. I believe regulators need to be incubators, need to move into another way of thinking by enabling the ecosystem for fintechs. So fintechs can start, test, and instead of doing POCs and big banks, please, I want to test this product. And I said, listen, your product, I don't know if it's reliable. It's going to screw up my network. I don't have a testing environment. So having such environment for regulators to enable fintechs test core banking services without touching the actual bank, or making a new body inside the country that do complete operational banking services without making an operation. So it will be an infrastructure, everything is available, only the team running this infrastructure without doing business. Now there will be no conflict of interest between the bank. It will be neutral bank. Banks can test with that bank, which is led and monitored and controlled by the central bank, and also fintechs can work within this bank. This bank has all the controls. What we see that most important factor is protecting the end user. When you do a wallet from a fintech company that you don't know, they might run out with your money. So who will be in trouble? Regulator. They will say, listen, Mr. Regulator, you are the financial controller inside this country, and you are the one who's protecting me. Please protect me from those. So this is the issue. This is the biggest issue that is happening today. If there is a way that collaboration happening, and this is happening today with the RegTech, regulation technology, this is coming an array of services that gives a control from regulators on the fintechs and alternative payments providers like the wallets to protect the end user. So we see that it's getting there. We have done ourselves a module that supports central bank with all anti-money laundering and CFT and sanction list, blacklist.
So this is generated from your end?
Yes, we participated, we created. We were having a pile of documents that we've been reading, and we said, what? We'll go through this, let us automate it. So we automated. Now our wallet, any transaction being activated, initiated anonymously, we check this list.
Right.
If the customer is enrolling, is registering, so we do a KYC based on rating. And this is in coordination with the risk department inside the central bank. We say, tell us your concern, tell us your worries. So they've been cooperative. Some banks been very cooperative. Some central banks, they said, no, this is not your job. So it depends on how the leaders of these central banks are regulators.
And Mohammed, allow me to just jump in and bring in a point you made. You said there's a changing role for the regulator, where the regulator needs to be the curator here. Let me bring in back Honorable Governor. Obviously, there's a lot that is thrown at your door in terms of you need to do this and that. But is there an architecture with which central banks like Rwanda or other countries can operate in? Because how far does an innovator go? You know, is there what is the framework really, or is it haphazard? Is it as you feel, or is there a system that you could say this is what we use and can be possibly replicated in other markets as far as not just regulating but also fostering fintech?
Yeah, you know, what we need to understand here is this is all new. So it's, I would say we are learning by doing. And so as we revise our regulation today, we realize that we need to provide for an environment and a period where a new product can be tested in sort of a semi-live environment. So today, they've been testing in, let me call it laboratories, then we work with them to see how it can work before it really hits the market.
So are the innovators, sorry to jump in, aware of these processes of testing before going live, or they think it's just unnecessary bureaucracy?
As you were saying, normally then if you want to start to launch a product that's dealing with financial services, of course you have to work with the regulator, because normally we should also understand the confusion of conflict between regulator and the fintechs shouldn't be there. Of course, they are regulators that are overprotective and they don't want to allow anything unknown. But I think we need each other. Even the innovators, you won't just throw a product outside there and get customers freely. The issue of trust in your products, when they know that you licensed operator, of course you get the trust and people will trust your products. So what we are doing is we are responsible to communicate what is required for you as an innovator, and this is the environment within which you can test your products. And then these are rules within which you can do the piloting of the product. And by that time, by this level, we should allow you now to go in the market and license you officially to start operating. So there's that balance. But as I said, today there's no blueprint that coming on the market. As I said, we just need to be open-minded and be ready to take the risk. The good thing is that most of these fintechs are dealing in small coupons of transactions. So none of them really have a big chunk of money moving at the same time. So we can monitor them before they cause any havoc. And then when we are comfortable with the securities, because the issue of security, today we have the cyber security concern, and then how you assure the protection of the money of your customers. Yes, so there's balancing all this, and yeah.
Right, and Minister, there's a question that I had that I will want you to answer at a later point. How big is it when an entity becomes too big? You've mentioned about the divorce proposals that you always throw at telcos whenever they become too big. We'll address that a little bit, and also I'd like to shift gears a little bit to look at this shared space that we do talk about. How then do we scale it up? But before I do that, I'd like also to at this point acknowledge the presence of the Cabinet Secretary for ICT for Kenya, the Honorable Joseph Musheru, who is here with us. He will share his remarks at the end of this, so you do want to hang around. You've heard us talk about Kenya as a leading light for everything, right? So you want to hear from the man who's driving that, okay? Let me just bring in Louis and as well Katka, because you are operating in a space of innovation, and it's a space that is riddled with a lot of challenges. How, in your view, do we scale this shared space between regulation and innovation? How do we scale this up to allow more people like Louis to get in this space? Let's start with Katka.
So, I mean, I think as I mentioned before, I think it's really important to kind of not talk, but do. Okay. So we are kind of the doers, and that's why we really support the startups to come to Switzerland, and I would say allow them to have the test bed with the corporations, with the banks, with the insurance companies, in collaboration also with the talks to regulators, to kind of see how it works. I really believe many times it's a lot about communication. That's what we saw a lot through the projects, and where, you know, startups are from Mars, the companies are from Venus, and the regulators from Pluto. So we really try to bring them kind of closer together to really speak the same language, which is definitely challenging. But I have to say that once it starts, it's really kind of happening, and everyone wants to work together, which sounds kind of really like, I would say, happy story. It's definitely not as happy all the time, but I think it takes time and really kind of so understanding what are the trends, where we are going, how is that going to change in the future. And I think it's a great example, like with Mergims, with Louis. We had him last year. You know, we really bring a lot of different startups from all around the world, including Silicon Valley. We had a lot of from UK, from Asia. And I was really proud to have startups like from Mergims from Rwanda to be the examples that there can be startups from Africa.
Right. And
they can scale and they can really, I would say, pilot different things. So he was working with different corporations. We really kind of helped them to scale. So then they can do projects in Switzerland as well as scale further. And because we work with corporations that are global, it's so much easier, I would say, to scale, of course.
Right, Louis?
I think the Swiss experience for me was the best one because what we need in Rwanda, there's an openness from the regulatory authorities to listen to us, but we need more dynamic environment. That's what I noticed in Swiss, where even private corporations are the one taking the initiatives to say, okay, we may miss out something here. So then fund such accelerator program like the Kickstart one I went to, and then bring people from around the world to really try to challenge the environment. So in Rwanda, yes, we have the openness. They never really put you in jail or send police to your place. However, sometimes we are delayed by outdated laws, where, for example, a fintech company, where I'm the middleman for insurance company or let's say for a banking scheme company, but I'm not a bank for real. So they require me to have $300,000 as trust. So I will never get that money. And no investors will put money in such a startup to sleep in such a bank when you are not a bank for real. So you're just the middleman. And we've seen that also, let's say, for the payment gateways that are still expensive, or let's say also, like me, online payment facilitator, where the KYC is not clear, what they need exactly from us. For example, the shirt I'm wearing, it's a Rwandan-made shirt. People want to buy it. So what you need to know exactly? Do you need to know who made it? Do you need to know where it's come from? Things like that. So it's really a matter of putting more dynamic element into this openness. But already compared to other African countries I visited, where there is no even laws available, you try to get them online, you can find them. At least in Rwanda, you find them. They may be outdated, but you find them. And then once you notify them, like I did often at Central Bank, they really say, okay, let's work on this one. And while we're having lunch with Honorable Governor, I actually asked him what was the latest update on some laws. And right away, he answered me. So that's how things
so you need more lunches with the governor.
Thank you for saying that.
Right. And let me just make the deal even sweeter. Allow me to welcome on stage the Honorable John Musheru to join us on the panel. Thank you. I know most of you have a lot of questions, so I'm just making it easier for you to throw them to him. In a short while, I'll be opening the session to the panel to raise your questions. But Minister Karibu, welcome to the stage. And you've obviously followed through the conversations, and you lead a market that is at the driving seat of all things fintech and innovation. Just to give us some scene setting in terms of what are the positives and what more can we leverage on the situation we find ourselves, especially for East Africa, that is obviously a leader in this space.
Thank you very much. It's been great actually listening from out there and looking at some of the challenges of regulation. I would say first, fintech has transformed lives in Kenya, has transformed many people's experiences, whether it's in financial, and in fact, the technology has gone even beyond just the financial. There's some unintended consequences. On Monday, I was with a friend of mine, he's an eye doctor, and he says, in fact, this M-Pesa thing has grown his business exponentially. So I was asking him to explain. He said, well, for most people, they use their phone with mobile money. They will not give their PIN to somebody else. So they go to the doctor when they don't have their eyesight proper. They're treated not just for the eyesight, but for all these other things, because they have to see the money. They thank the doctor mostly because of what has changed. They say, now I can see my money, I use my PIN. There's maybe not as much trust, whereas before they didn't care whether they could see well or not. Safaricom has just announced their results. They say about $68 billion was transacted through M-Pesa last year. Our GDP is about $65 billion. So this is a very significant player in our market. We were in the Euromoney conference earlier this week with the governor of Central Bank in Kenya. We've been having a lot of discussions with the other mobile operators who feel mobile money, is now taken over even the telecommunications sector, such that they don't get the market share that they need, that most people will stick now with just one. And so we've been having a lot of discussions about mobile money interoperability. There are some people in parliament who feel, like the governor here, that we should split the mobile money business to the telco business. I'm totally opposed to that myself. And I'm opposed for the simple fact that the mobile networks need investment. Somebody has to continue to put money so that those phones and those networks are actually operating and working. So if somebody has innovated, and you then say, because of that innovation, now we'll carve it out and put it somewhere else, it becomes then a disincentive. And for our country, that could be a challenge that people don't want to continue to invest. It's a challenge in terms of regulation, true. One, there's the regulator that licenses the operator on the telecommunication side. Then because of mobile money, we now add the central bank. But then there's the competition discussions. We then add the competition authority. And because some of the companies are listed, we add the capital markets authority. Now, if all these people are not talking together, then there's always this push and pull between the different regulators, the policy makers, to try and make a difference. We've had 2 instances where M-Pesa has actually gone off, and for the country, it's a significant risk as well when you have such a big network. But it shows that fintech is the way to go. It has transformed many of our lives, and investments are now happening on platforms that are being built over and above the M-Pesa platform. One thing to note is the technology used is probably the most basic. You're talking of USSD and SMS. Others talk about 4G and all these others, but we're talking of very basic technology that transforms lives. And so even the investment in these technologies is not necessarily so high. Really, it's the regulation and the opportunity for people to see the business opportunities to then invest in those businesses. We have other players that don't own networks and are not banks that want or that are already playing and operating on, providing payment services. We have other companies like, say, M-Kopa, where you can use the mobile money services for pay-as-you-go service for electricity and so on. So there's a lot of other ecosystems growing over and above the fintech sector. And because of its success, then you're seeing a lot more investment coming in.
Right.
So that's a summary of where we are in Kenya.
Fantastic. And just picking up there, I see Governor Rangombe want to jump in. And for a lot of innovators and entrepreneurs here, there's a feeling that the regulator will always want to punish success. What are the rules really? Because at times it's very difficult, whether you're looking at Kenya or any other market in the north, and I'll give Mohammed a chance as well to react to that. But what are the rules? How do you, what criteria do you use? Is it that the business has grown and it has to be cut and fit in the box in which the government can see it, in this case government being regulator, or is it, should the regulator evolve to meet the needs of entrepreneurs?
No, I think from the beginning I said we learn as we go, because this is a changing environment, and I wouldn't agree with your statement that we punish success. At least from our point of view, we try to facilitate and enable the success, and that's why we are saying we keep on changing the laws depending on the innovations, and it's, in most cases, is to facilitate. But also, of course, as the customers different from somebody that's dealing in. So the point I said earlier maybe shouldn't be misinterpreted of separating the business. It's like we don't intend to set a separate company that manages mobile money, but we are saying these are two businesses managed under one roof. There's a telecom business that is really, the telecom company is earning the fees for using their units, but there's now this other mobile money business that has customers' money sitting on a bank account somewhere and sitting in electronic form in the telecom company. So we don't want to separate the business as such in terms of physical separation, but we need to have another eye, which we call the trust, that oversees the management of these mobile money accounts, which doesn't belong to the telecom company. This is money belonging to the customers. The telecom company earns a fee on these transactions, but it's like money sitting in a bank that is really not the bank's money, but money for their customer. So what we are introducing is a trustee that oversees the management of this company.
Right.
So our interest always is to see that the electronic money mirrors exactly with the money on the trust accounts in the banks, and therefore we are sure that and then also how the operational systems, how we protect fraud to avoid people losing their money overnight. That's our responsibility as a regulator. And of course, as the business grows, as the cake grows, the risk is very big, and therefore we need also to be much stronger in terms of protecting this big cake. Right. But we, at all in our literature, in whatever we do, we intend to facilitate and not to fail the growth and success.
Right, right. I will just take Mohammed's submission, then I will open the floor to the panel. So, Mohammed, have you gotten to a place where you felt as if the regulator was putting a leash around you?
A lot. Many times. So, as I said before, they are trying to protect the customer. In whatever way they are trying to invent or try to survive with, it's always limiting a kind of innovation. So the scalability is something like need to be more elasticity in the regulations. So as much as they enhance, they have to be faster. And I was excited about the ministry program that they did, the GSMA, this year in Barcelona, where they are educating regulators about the new technologies like IoT. When IoT it comes, how regulators will adhere to that. So you start having not human transacting. You will have machines transacting. You will have your car paying for itself. How you regulate this? It's going to be a lot of disruption is coming. It's a lot of fun. I call it fun. These challenges, I call it fun. Lots of fun we are having, they are having, and we have to enjoy the game. In order to enjoy the game, it's better to be a kind of collaborative, a dialogue, always continuous dialogue between the financial sector, all the stakeholders, because we always talk about payment. The payment technology is one domain. In fintech, actually, you are going into lending, to robo-advice, you are going to data analytics, you are going to treasury. A lot of services are coming from the fintech, actually. Opening up banks and turning them into APIs and use their operations with fintech. This is going to be like a surgery you are doing for the current big banks that they think they need to be in control. So how these things need to be done? So it needs an ecosystem to be created, to be revamped. Interoperability is very important. Interoperability, it will enhance the customer experience. Everyone wants to control. Everyone wants his domain, his closed silo domain that is the money circulated in. I think this is not right for the economy. For the economy to scale, to grow, interoperability is needed. What we have done in Uganda, we have done interoperability between AfriCell wallet, MTN wallet, and Airtel wallet with Inter Switch and Visa and MasterCard. End user is getting just single checkout page at the end of the app, either for settlement or a top-up. He will end up with all these options. Whatever option you are having today, you will use. So now you are encouraging value-added services. You are encouraging quality of service that those alternative payment providers that they will be turned later into a digital banks can offer to the customer.
Interesting. So in terms of disruption, interoperability is something that we have to look out for. But at this point, I'd like to open thank you. So once the microphone comes to you, just tell us your name and just one question only. And if you could direct exactly to who you'd want to address your question, that would be good for us.
Good afternoon. Amar Adami, Cybertech. My question to the governor. There is no doubt about mobile money and growing, and in Africa you are number one as a continent. And regulation is important, I believe, between the fintech and the regulator. But what about the end user? There is billions of cybercrime money lost every year. And it's easy to make regulation, but how to make sure that the mobile operator or the fintech are applying it? Because at the end, when the money will go out, the end user will be affected. So this cybersecurity, the more you are open for connectivity innovation, which is very good, disruptive, but there is more risk coming also with it.
So who protects the end user? Okay, let's take one more, then we'll come back to the panel. Do we have someone with a question down there? Yes, please.
Hi, my name is Priya Shah from a company called Express Automation in Kenya. My question to the governor or any of the other panelists who care to answer is it the end of banks as we know them?
All right. So Mohammed wants to jump on that. Mohammed, you can have a quick go, and then we'll come to the governor.
Okay. Until today, the final settlement happening inside the banks. But if government decided to issue virtual currencies, not bitcoins, whatever digital version, not printing banknotes, I can say yes.
Okay, interesting. Governor?
Maybe on the first question, who protects the end user? I think that's why the regulators are there. And as I said, at the end of the day, our main mandate is to protect the customers of these electronic money issuers, and so the rules and regulations that are there are really supposed to protect the end user. And the issue of cyber security is part of the regulatory requirements to anybody that is coming into this business. So it is our responsibility, and as the minister said, we don't have that much capacity in IT, so we work with our counterparts. Close collaboration. So that is our responsibility together with the IT regulator. Is it the end of the banks? I would say no. But a bank that will not adjust to technology, yes, it's the end of that bank. So it's like talking of telecoms. When mobile telecom came into being, we had telecom companies that were landing landlines. Those that didn't adjust, of course, lost business. So now the banking is moving from the brick and mortar to digital financial services. So banks have to invest in digitizing their services. I think the role of the banks and the trust they have among the populations is really big, that can't just be lost away. And also the banks collect savings, aggregate savings and lend in a regulated and organized environment. So whether we use hard cash or whether we use electronic money, that remains a key factor. So I don't think the banks is the end of the banks, but they have to adjust their operational models.
Right. I see Katka nodding, but Minister, just calm the nerves for somebody who has invested in the banking space who is sitting here. Is it the end of the banks as we know them?
So I think if they don't invest in technology it will be. When M-Pesa started in Kenya, there was a big debate in the Ministry of Finance. The banks had come and that said that's their mandate and the operators should not be given this opportunity. And the minister asked, so are you able to transfer 100 shillings, which is the equivalent of $1? At the time, the minimum cost for any transfer in the banks was $3. So they were not able to compete, in which case then the mobile money services were allowed, because then you're able to reach a lot more people. In fact, at the time, there was about 4 million bank accounts. The mobile money accounts went to over 10 million. Today, we are talking of over 32 million accounts. The challenge is also, banks also lend money. Today, using machine learning, big data, there are companies that have come up, and all they do is they look at your data, whether it's social media, your call records, and they're able to lend you money. There's a company I know that's able to lend you 10 US cents. Now, without technology, you can't lend that kind of money and still make a profit, because it's very small, and they're lending for a day or two, they get their money back. Most banks cannot be able to compete in that space unless they themselves now go into that area, or they start investing in companies that are in that space so that they then are playing. I would also say, in terms of the tension that's be there between the and if they are not taken into account in technology and the changes and the way, then you find behind. So they need to be changed, and it's responsibility to make sure with the right country.
Okay.
A lot. Today we speak about payment, but there's so much more, right? There's insurance companies, there's companies, there's connected to blockchain, to smart contracts, and much more. So all of this is really kind
One right behind you.
For the governor and the minister, what will be your reaction if the telecom company will ask for bank license?
If they haven't already.
Sorry?
If they haven't already. What will be your response if the telcos ask for a bank license? Okay, let's have the next question, please.
My name is Emable. My question goes to the governor. When you say startup can come and talk to you, Muhire said, if I want to open a small bank in a village, are you going to ask me the 300,000, or are you going to ask me small money? Is it clear on that end? Thank you.
Okay, who wants to go first?
Okay. So if a telecom company came and asked for a banking license, fine, we'll give you a banking license, but we'll require you to fulfill the requirements of a bank. In that case, you are no longer a telecom company, you are a telecom company and you're a bank at the same time. So we don't segregate who runs a bank, but you need to fulfill what is required to run a financial institution. And so the That's all. So there's no problem with the, but you can't run financial services as a bank without a banking license. At least that's what's clear. Then to the colleague, if you, more or less the same. So if you want to open up a small business in a country, then in that case you'll be running a microfinance institution. And I think microfinance institution, the capital is 5 million Rwandan francs. So if you want to do a bigger business, you can run a microfinance bank that requires 300 million, or you go to a commercial bank that requires 5 billion. So it depends on what you want to do. Then you need to put up the capital that supports the kind of operation you want to do.
Minister?
So in our market, the mobile money operators are actually still licensed by the central bank, but they are licensed for payments. It is a platform that they have. So they get a license to be an operator where they have voice and data and SMS services, but for payments, they get a license from central bank. Central bank requires them to have a trust account. This account is held within an existing licensed bank, so they don't keep the money into just their own account. So there is some form of control. The mobile operators have limitations. In one day, they're not allowed to transact more than 140,000, that's $1,400, and no customer is able to keep more than $1,000 into their account. Whereas for those banks that are operating mobile money services, they have up to $10,000. They have a much bigger margin of what they can use for transactions. At this stage, we have not seen the operators get interested in becoming banks. I think the regulations and requirements maybe they would slow them down in terms of the innovation, so they're happy to remain as a platform. The main challenge has been, is there then mobile money interoperability, which is what you had. In Kenya, we've taken quite some time, but we've now finally agreed amongst the main operators that there's going to be mobile money interoperability, and they will start off with no one paying anyone in terms of the interchange fees. Customers will continue to have the same experience, but there will be no cost. But it means then also the banks are able to have the mobile money interoperability with the operators. So in a sense, they're all going to end up working in the same pot. The number of bank accounts versus the number of mobile accounts is still skewed to the mobile accounts, but we expect over time to begin to even out if the banks invest a lot more than in technology and the services that they need to.
Right. So our time is much spent, but I'd like, as we give our closing comments, first to start with Louis to respond to that, but also to address the question of, now that we've all agreed that there is no running away from fintech innovation and that it has to work hand in hand with regulation, how then do we attach the third component of ensuring that our innovation are inclusive in nature from a financial inclusion point of view? Muhire, and then we'll come to Mohammed and Katia as we wrap up.
All right, thank you. So if I start with your last question, I think we need to have, as I say, a conversation on a regular basis between the different players. That's the only solution. And I would want you to comment, or actually to confirm what the Honorable Minister from Kenya just said. For Merging, for example, I don't want to become an insurance company. I don't want to become a bank. I'm not interested at all. I want to stay this platform, as they've noticed. I want to say this middle platform that has found a way to make life of, let's say, diaspora people much easier. So definitely the question he asked, Imam, is the question, or is the challenge I'm facing sometime, where some regulator will see me as a payment gateway, and I'm like, no, I'm not a payment gateway because I'm using Bank of Kigali payment gateway. Oh, so you are a bank. You know, I'm not a bank because I'm not holding the money. It's actually getting from the credit card for the user directly to the Bank of Kigali with the merchant. So we need to have this conversation, and most of the fintechs, maybe to disappoint some people who thinks we want to get in conflict with banks. We are not interested to become banks. It's really boring job. I'm sorry to say that. We want to come very dynamic, like, sorry, Governor, I didn't want to say you're not a bank anyway.
That's how you'll miss your next line.
No, I just want to tell them I don't want to destroy any bank in Kigali or any store in the world. I want to partner with bank where, for example, a diaspora guy could get mortgage through merchants of Bank of Kigali, and my platform will be the best way to do the KYC element in the easiest way. That's what I'm interested in, and make my 1% margin on that payment every day. For the insurance part, diaspora wants to pay insurance, so I want to be partner of a local bank, insurance company. But really, we don't want to disrupt anyone. However, as you said, if those banks who resist to the proposal we are making them, then one day the user at the end is the one who decides. If merchants find a Chinese bank that can really comes in and ensure Rwandans, which is sometimes possible because I can get my insurance in Canada and ensure my presence in Rwanda, then I will go with the Chinese company. So this bank will lose money. So really, let's have a conversation together, and don't worry, we are not here to destroy no one. Thank you.
Okay, Mohammed, your closing comments? Ladies first, sure.
So for me, I think what you said, like what should happen, I think less talk, more do. I see that all the time, that people always speak about what they're scared of. They're so scared about what they cannot do, but I think sometimes they forget what they can do. We try to do that with startups every day. We see the huge changes and the transformation. We definitely hope it will go faster, but I think that's something that we really hope it will help and kind of increase in the upcoming months and years. But I think it's really interesting to see kind of success stories, that people really get motivated and really do more. Because I think that's really necessary to do that. And be lean and test. I mean, I think we don't have, and we should have more sandboxes and test beds and much more. Like with all the parties that really need to move fintech forward. I think there should be more.
All right, Mohammed?
I think, as I said, we need to have the dialogue always open with the regulator. So regulator need to do a kind of a workshop on a regularly basis, showing one of the problems that they are facing and how the fintech can respond into that. The other thing, there are banks. Banks actually already been regulated. So banks knows what they need to do. So regulators need to encourage banks to listen to the fintechs. So fintechs can be the accelerator for the banks. You are the accelerator for entrepreneurs. Fintech can be the accelerators for the bank, for the financial institutions, because they are well equipped technologically. What you need from regulatory body, you need controls. So if the banks is communicating these controls or trying to find a way to collaborate with the fintech, you will be building a fantastic ecosystem where banks is growing and scaling by protecting the customers and adhering to the regulatory body, and fintechs are enhancing the offering to the end user by enabling more channels, by enabling more accessibility, by enabling losing KYC for a certain amounts based on a certain controls. So it needs to be revamped the way it's happening today, that there is a decree that will be releasing a new regulation that will open up and some consulting firm and come up with something based on a success story in another country.
Right.
I think this will not work anymore. It has to be based on the culture, it has to be customized, it has to be tailored, it has to be including those people that need to comply to this regulation. Today, you can see everything is going crowd. So crowdfunding, it has to be a crowd decision as well. So making a decision making, it has to be from the crowd. You can take the most innovative, scalable, self-regulating themselves fintechs, and you start listening to them. I think this will enhance the communication and will enhance a lot and expedite a lot of services that can be benefiting fintechs as entrepreneurs. They don't need any more to burden the governments to jobs, to create for them jobs. They are creating jobs for others. Getting access to fund is empowering ladies. So ladies at home can start tailoring something, they can bake something, and they can sell it using social media and then fulfill, end of the day, with this instrument that enable the access to fund. They can they can grow their businesses. They don't need anything from the government. Crowdfunding platform that can be everybody participating in order to support others. We have money, others don't have money. We have an excess of money. We can put percentage of that as a social responsibility from all companies, from any wealthy people, from anyone who is participating into that in a crowdfunding platform that will fund a crowd funding platform for merchants, as SOHOs, small office, home office. Don't give people money. Why you need the money? You need the money to buy some goods in order to sell. Okay, I'm gonna buy these goods on your behalf. So make the working capital for them, for their businesses, in order to protect, you mitigate the risk. You want to do the KYC, you need to do a lot of stuff. Now you have the control. If you encourage FMCGs like Coca-Cola or Unilever to give the goods and it being insured by the governor of central bank or by big banks inside the country, they will give their products on a credit and a minimum amount. At the same time, you are having a control because the liquidity also inside the bank. This means that accessing the fund, end of the day, there is a liability inside the bank. So it's a closed loop, but in a very macro level than a micro level. It's in a micro level in a scale, a macro level in control. So this will scale up your economy. This will open a lot of jobs, a lot of opportunities. People just want to live. They don't want to have that luxury life. They want to live. Today they don't have anything. Disconnected.
I want a luxury life.
Now you want a luxury life? Go to a bank.
Okay, Mohammed, allow me to just have the absolute final word because our time is far much spent. But ladies and gentlemen, for the past hour or so, we've just spent time trying to imagine what the future could be in fintech. And what is coming up is that paytech seems to be what we all talk about, but there's immense opportunity elsewhere. And that probably for a lot of innovators and entrepreneurs seated here is an opportunity that you want to take. Also, it has come clear that this marriage between innovators and regulators need to be stronger. They need to work together. There's need to be to listen a little bit more to each other. Also, we've realized that we do not have the luxury to jump. We'll be pushed by innovation for the case of banks. So obviously, this is with us. We cannot run away from this situation. But I think the biggest take-home for me and for a lot of us is that it is with us. Whether we are ready or not, it is with us. Ladies and gentlemen, allow me to just thank my panel, the Honorable Joe Musheru for joining us, ICT Minister from Kenya. Round of applause, please. Also, Louis Muhire, who is the Chief Executive at Margims. The Honorable Governor John Ragomba, Governor of the Central Bank of Rwanda. Mohammed Al-Rashidi, founder One Global Group. And probably a bigger applause to the only lady in the panel who saved us from being called a manel. This is Katka Letzing, who is the lead fintech vertical from Switzerland. Thank you very much for the opportunity. There's more of this conversation that will happen after this. So go out and just network and let's build a little bit more on what we've discussed. Good evening.
Ikaze nanone muri gahunda ya bikora bite ni gahunda mutegurirwa kandi mukagezwaho na Komisiyo y'Igihugu y'Ubumenyi n'Ikoranabuhanga aho mwungukira byinshi mu birebana n'ubumenyi n'Ikoranabuhanga dore ko isi uko irushaho kwihuta mu iterambere idasigana n'ibi byombi yaba ubumenyi cyangwa se n'iri koranabuhanga. Uyu munsi muri gahunda yacu tugiye kurebera hamwe uburyo imirasire y'izuba ishobora kubyazwa ingufu z'amashanyarazi. Izuba aho riherereye mu birometero miliyoni 150 kure y'isi rirekura imirasire ifite ubukana bushobora kubyazwa ingufu zo ku rwego rwo hejuru. Izi ngufu zihoraho kuko mu bihugu byinshi bigize isi imirasire y'izuba igerayo. Nubwo iyi mirasire y'izuba ishobora kuboneka ku bwinshi kandi ahantu henshi ku isi n'igihugu cyacu kirimo, kugira ngo ibyare ingufu z'amashanyarazi hari uruhererekane rw'ibikoresho by'ingenzi rugomba kuba ruhari uko byagenda kose.
Ni system igizwe n'ibice navuga by'ingenzi bine. Igice cya mbere ni kiriya gikurura imirasire y'izuba aricyo twita panneau solaire. Kirayikurura, kikayifata, kikayihindura, kikayibyaza amashanyarazi. Ayo mashanyarazi niyo agenda akajya kubikwa muri bateri dukoresheje insinga. Ariko noneho iriya bateri ikenera kubungabungwa kuko hari igihe ufite uhawe uwo muriro akenera kuwukoresha akaba yawumaramo cyane ikangirika, cyangwa se mu gihe atarimo kuwukoresha ukaba nabwo yakuzura cyane ikangirika. Icyo gihe rero hagati ya bateri n'iriya panneau solaire dushyiramo ikindi gikoresho twita cyagiregureta. Cyagiregureta ikimaze cyangwa se ubundi twita regulateur, ni ukurinda bateri ngo itangirika bitewe n'uko bayidesharija cyane cyangwa se itangirika kubera yuko yuzuye cyane. Iyo ugiye kuzura cyane iriya cyagiregureta yikuraho nta kibazo igize. Nanone iyo bayikonsomye cyane irongera ikayikuraho. Hari imibare ntarengwa aho itagomba kurenga uyikonsoma nawe utagomba